What's up guys, Ben here and welcome to Motivation to Invest. Breaking news, Warren Buffett has recently invested into a speculative tech company which is just about to IPO. Now this is shocking for many reasons. The first reason being that Warren Buffett usually avoids tech companies, and he also states that he doesn't invest into any business he doesn't truly understand. But this recent investment is a complicated tech company which has a much anticipated IPO. So could Berkshire Hathway be onto something? Because Salesforce has also invested. And should you invest into this IPO? And what's the company? Well, firstly, the company's called Snowflake. No guys, not that type of snow. Snowflake is a company which focuses upon big data and cloud services and has many major enterprise clients, from Amazon to Square and even Salesforce. So in this video, I'm going to reveal whether you should be buying the Snowflake IPO. I'm going to deep dive into the business model and the numbers. Be sure you guys watch this video till the end, and I'll even reveal a very special secret which may help you to get Snowflake shares at a low price. So if you're ready for that, let's dive in. So what does Snowflake actually do? Well, Snowflake is a cloud services business which focuses on big data, which has become the new driver for the economy. However, to give you guys a little bit more detail, I'm going to show you a short preview from one of their investor relations videos to help you understand the company effectively. Because as the great Warren Buffett says, be sure you understand the company before investing into it. And I'm sure somebody on the Berkshire Hathaway team does understand Snowflake and exactly how it works.
Our appetite for data has never been bigger. But connecting data across an organization can be a daunting task. As the dynamics of your data change within your organization, so does the complexity you face when trying to deliver value from data at the pace your business requires. All too often, the solution leads to a complex data architecture where you spend more time managing infrastructure at the expense of finding untapped potential within your data. Snowflake allows you to build a modern data architecture with our leading cloud data platform that eliminates the complexity, cost, and constraints inherent with other approaches. Available as a service on leading cloud providers, Snowflake eliminates architectural complexity so you can run many workloads with the elasticity, performance, and scale required by the modern enterprise.
The company also specializes in marketing analytics, that is collecting a 360-degree view of the customer and tracking many different data points. So what about the CEO? Well, one of the requirements I look for before investing into a business is, does the CEO have a great vision? Is he grounded? Is he experienced in the field that he's in? Frank Slootman is an interesting character. He has over 25 years of experience in Silicon Valley, and he's very grounded and astute. I wouldn't call him a major visionary compared to, say, somebody like Elon Musk, but he's very grounded, which could outbalance this high growth, volatile stock. So what's the competitive advantage of Snowflake? Well, I'm not an expert in the cloud services industry, and I don't work for any businesses or have my own business which uses their software. But if any of you guys do, please let me know in the comments below your thoughts and your experience of using their service. But from what I can gather, their competitive advantage seems to be the easy to use interface, the efficiency of the service, and the fact that customers can move their data across multiple cloud platforms without being stuck with one provider. Now, I've heard that this is a major issue for many businesses. Let's say you sign up for, say, Amazon Web Services. You have to use their products and their services. You can't just move your data across to your other provider that you use for a different aspect of your business. So I believe this offers Snowflake a unique position in the market. There are some more thoughts on that from the CEO.
You know, what we've observed over the last 3 years is a great acceleration, re-acceleration of Fortune 500 moving to the cloud. The United Airlines of the world finally moving their data center to the cloud. But they're voting overwhelmingly that they want to have multi-cloud architectures, right? So Amazon has a competing product, yes, that works on Amazon. Google has a competing product, yes, that works on Google. But Snowflake really is the only cloud-native application that works across clouds. And maybe, Frank, you could talk a little bit about just the power of that data replication.
Yeah, for CIOs, there's the real prospect that they get completely locked in to a single public cloud platform, and it's like handing over your wallet to a used car salesman. It's not a dynamic that you're going to be happy with. So they want to make sure that they can arbitrage the public cloud, at least to some extent, that workloads can be moved from A to B to C, so they maintain a negotiating leverage in these relationships. These relationships are enormous. The amount of money that large enterprises will spend on these public clouds are so huge that having a multi-cloud, cross-cloud posture is critical.
So what about competitors? Well, there seems to be a lot of competition entering this space, which is the cloud and big data arena. The company to me seems similar to Palantir, founded by Peter Thiel, who was a co-founder of PayPal and member of the PayPal Mafia. Palantir is a big data organization which also uses the cloud. And even companies such as Amazon have their own cloud and big data services such as Amazon Redshift. Amazon Redshift is a data warehouse product which forms part of the larger computing platform AWS. So what does this mean for Snowflake? Well, it means Snowflake's customers are some of the big tech giants such as Amazon, but at the same time they're also their competitors. And believe me, this can add a lot of friction to doing business. Here's a few more words on that from the CEO.
Is that you're a customer of Amazon and Microsoft and others, but you're also competitors. But how does that work?
It works better on some days than others.
There's tension?
Of course, there's all kinds of friction, but yes, you're right. I mean, we're spending hundreds of millions of dollars with them, so we're a good customer. We partner because we drive legacy on-premise workloads to the cloud. It's all goodness. But at the same time, they have their own products, and it can get pretty testy out there. But it's a huge market, and because of that, we figure out how to sort of control the impulses a little bit and make sure that we perform for the customer.
So what about the numbers? Well, let's dive into the numbers right now. To find the latest numbers for Snowflake, we need to look at the S1 filing. So an S1 filing is what a company needs to issue before they go public. And it basically details their financials, the business model, risks involved with the business for all investors to see. Diving into the S1 filing, mobilizing the world's data, reimagining data management for the cloud. They've got data volume, performance, utility model, instant elasticity, and ease of use. That's their unique selling points. Rise of the data cloud. You've got data cloud, cloud data platform, data warehouse, cloud native architecture. Here are the key numbers for you guys. Revenue growth, 121% year on year. Wow, that is incredible. So to put that into perspective, generally with businesses, I look for a growth rate of around 20 to 30%, and I consider that, okay, that's a good growth rate. Around 50%, that's great. 121% growth rate, wow. 158% net retention, that's incredible also. So as it's an enterprise service, once these companies sign up to Snowflake and they start using their cloud platform, they're very unlikely to change and move to a different provider, and that's where they get this 158% net retention rate. If anything, they're more likely to refer other companies to use the same services. Now, the only reason really the business would actually move is if they found the service bad, they found it poor, it wasn't innovating and improving compared to its competitors, but generally they seem to have a very good retention rate. This means the customers are very sticky, which is great for a lot of these software businesses. Customers, 3,117. That's pretty good as well, because as an enterprise business, you don't really want to be a company where you've just got, say, 5 major clients, even if they're the big tech giants, because if they drop or one of them decides to end your contract, it can really hit the stock hard, which makes it very risky for investors. Right, guys, so here we are in the numbers for Snowflake. You can see in 2019, they had revenues of roughly $96 million. This then shot up to $264 million in 2020. Now that's incredible growth. You see it's more than doubled in value. So what are the main costs for this business? Well, we can see here it's spending $125 million in 2019 and $293 million on sales and marketing, and then it's got R&D costs and general and administrative costs. So the idea of this company is to do what Reid Hoffman would call blitz scaling, which is reinvest all the revenue into sales and marketing, grow the company as fast as possible, grow its market share, capture as many major clients as possible. And then what we should start to see is, as the customers are very sticky and they've got a high customer retention rate, then these marketing costs should start to decrease over time, and the revenue should still stay at a high level and continue to grow into the future. So that's something which I'd say, if you're going to track Snowflake stock, keep an eye on the sales and marketing costs, because what you want to be seeing is the ratio of how much it's spending on marketing and its return. You want to see that to be improving, or at least staying the same over time. So let's say the company spends $1 on marketing. For every $1, it makes $2. You want to look at that saying the same or improve. So this marketing cost here, over time, this should decrease, and then there's profits in it for the shareholders. Now, I did promise you guys a secret on how you could secure a potentially extremely good share price if you wish to invest into the Snowflake IPO. So I'm just going to dive into a paragraph from the S1 form, and then I'll explain it afterwards. In the S1 form, it says the second trading day immediately following the day that the closing price of our Class A common stock exceeds 133% of the initial public offering price for at least 10 trading days in the 15 trading day period following the 90th day. Basically, all non-employee stockholders have the right to sell 25% of their stock. So what does this mean in English? Because I do feel like a lot of these financial forms are written in a certain way to make it difficult to understand for the public. Only a select few know what's actually going on. Well, let me explain it to you in plain English. Let's say the company IPO'd at $110. Now, Snowflake recently announced that it bumped up its expected IPO price by around 30% and could debut at more than $30 billion. So the company was previously going to debut at $75 to $85 per share. Now that's been bumped up to around $100 to $110 per share. So that's something you need to be aware of. If we assume that, if I give you a rough English translation, in between the 1st and 2nd of December, in any 10 to 15 day trading period after, if the stock is trading at more than around $146, if they did a $110 IPO, then an additional 37.9 million shares will be available on the market, possibly, if these shareholders decide to sell. If this happens, this would effectively double the amount of shares on the market. Now, as stock prices are governed by supply and demand, a new influx of shares which have suddenly been sold off could cause the stock price to crash. This is called share dilution. Now, this means around December time, the stock could be extremely volatile. Now, Buffett isn't worried about that, and neither is Salesforce, as they invested prior to the IPO. So what does this mean for you as potential investors? So I do think Snowflake is an exceptional company and could be a major cloud player. So if you're investing for the long term, the trick is to not sell out and panic during those times. However, if you also prefer to sit on the sidelines and watch the action unfold with this stock, you could actually wait for December time, wait for this potential share dilution, and then if the stock crashes, you could invest in then. So that could be a great buying opportunity. So what am I doing? Am I buying this IPO? A lot of you guys who watch this channel regularly, you'll know one of the unique things about Motivation to Invest is I reveal what I'm buying and even when I'm buying a lot of these stocks. So with this stock, it does have a tremendous growth rate. They have some great customers and a high retention rate for those customers. However, like many IPOs, I expect the stock to be extremely volatile in the short term. I envision it to increase by at least, say, 100% on IPO day, and then it could crash by 50, 60% in the next few days or the next few weeks, or it could shoot up by 200%. So the stock could be extremely volatile, and that's a risk when investing into an IPO. Also, due to Amazon being one of its customers but also competitors, I do feel like this adds some friction into the stock, which could cause potential share crashes in the future. And also, if Amazon improves their platform and decide, actually, we don't need you, Snowflake, we don't need your services anymore, then will other enterprise customers decide to jump ship to Amazon Web Services and get to use their web services and their Amazon Redshift services all in one place? Now, that's a question which needs to be asked. Having said that, do like a great opportunity. I do trust it's a great company, as Warren Buffett's invested into it and the numbers do look fantastic. So on IPO day, depending upon how quick I can get in there, if I can get in there pretty quick, and let's say I set an automated buy order on Trading 212, free stock on the link below. If I can purchase for around the IPO price, let's say $110, $120, $30, if I can get a nice price, then I will invest a small amount, a very small stake into the business. But it won't be a massive amount of my portfolio. It'll be less than 0.5% of my portfolio. It's just to give me a little bit of a hand in this stock so I can further investigate it for you guys. In the future, I'll track the stock, and if this potential share dilution happens, I will be expecting the stock to drop, and then that could be a major buying opportunity. Either way, guys, this is not financial advice, so please don't invest any money which you can't afford to lose. But this stock could be a great opportunity for the next decade. Let me know your thoughts on Snowflake stock in the comments below, and I'll join in the discussion. And if you guys enjoyed this video, feel free to give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock market picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I will see you guys in the next video. Invest safe.